Guys, how are you? Good Wednesday. Please give me the okay that you can hear me and that you can see my screen. And then we can start. Fantastic. Perfect. Thank you very much for the update. I apologize for the delay today. Got stuck in unexpected traffic inside the city, like a place that normally never have a traffic. So sorry for the delay. Just had to send the update on the telegrams. So let's begin then and see what do we have from Mr. Market. First of all, very important to mention Thanksgiving, Black Friday, Cyber Monday, a big event in USA. I am. Thank you very much, Tibor. I'm all good. Thank you. So these days, starting from tomorrow, a big day for the USA. The market is expected to be in a sort of a holiday mood. That means, and we see that the entire week, right? But we can expect during these days even lower volatility, much less volumes to be involved. And it's important to remember that because, when we see the chart, it somehow always look to us there is always something to do, and that's not true. And it's important to remind ourselves that, and if there is nothing, there is nothing. And if there is nothing now, there will be nothing in about 15 minutes or 1 hour. So it's important to remember these things. So let's start then and I'll go over the report. The first one we are writing is the Australian versus the Kiwi in writing Excel from previous week. Our expectations, let's change the color. Our expectations for this to complete, the closer the better towards the psychological level 105, and after that this is pretty much what we would expect, something like that. So let's take a look in the chart. Where do we stand with that? The pair is zigzagging, as you can see, getting closer and closer towards the 105. The divergence is already in play, and of course the cycle. How do we create this cycle? This is the first daily leg, so it's a cycle by itself on the 4-hour chart. We put the Fibonacci, since this is a special cycle, our main levels to watch, that's the 161.8, which is irrelevant because the price went much lower, and the 261.8. And the second leg with the third leg normally to bring us towards the 61.8, which is the case. As you can see, magnificent supportive area, magnet zone, meeting point of two independent cycle, and we expect a bounce from here. Now, since we are dealing with ending cycle, right, we are at the end of an ongoing developing cycle, a trending cycle, sorry. So we require reversal signs. What are the reversal signs we normally have? Two false breakouts and convergence, right? So we already in play with one false breakout. We might go and see a second one. And then the convergence. Currently, the high is here. Of course, this high, assuming there will be a divergence completed, this high would move to here. And then we can basically, let's just, for illustration here, draw the lines. And then we create convergence or convergence principle, and we can start talking about buy retraces. Of course, on the shorter term was the 4-hour chart cycle. Okay, the alternative to that, 3 higher highs, 3 higher lows. Assuming we got that instead of the 2 false breakouts and convergence, buy retraces is our plan. Okay, so right now, basically a good thing to do is to get rid of the cells, or the majority of the cells, if you still want to potentially try and enjoy this longer reversal. But the level is very powerful. Daily completes first leg. We are next to psychological zone. Dynamic 200 moving average. Watching on the Bollinger Bands, we are in full move of band to band, from band to band movement with 50% deviation. This is a clearance zone, very powerful area by itself. Okay, so yeah, the assumption is the sellers should slowly lose their control, and they basically do. We can say that these rounding things do not happen just out of nowhere, right? You can see how the price is building here. Very powerful momentum, and slowing, moved on the next leg, right? It's a sign that the sellers do lose their control, and the buyers definitely would try and fight here. So that's for the Aussie Kiwi, and our watch list remained basically the same. As soon as the reversal completes, our main cycle becomes the 4-hour chart special, and we will be trading this. Next one is the Euro versus the Aussie. We broke the trend line, so we wanted to get the 1-hour chart breakout right here. So we got the breakout at that moment right here. Then the price goes up, down, up again, down again. And where do we stand with this pair? Now, it does exactly what we don't want to do, what we do not want to see, right? It does zigzagging, back and forth, back and forth. And what's the main thing which we dislike is when all the move happen within one candle range, especially when this is 1-hour chart candle. So this is a double bottom zone of a very strong support zone with a bullish divergence, and the 4-hour chart, it's a bullish divergence by itself. Now, what will happen from here? We have no clue. And the reason for that is because from one side, this is a triple double, right? With a holding momentum and supportive zone with a bullish divergence. So break above this trend line, and we can expect one more rally to the top of the daily range. Why not? Definitely possibility, right? From the other side, because of the weekly cycle, which hint for the bearish direction, that could be just the beginning of some sort of a bearish trend. So how will that be developing? There is no way to know. One thing there is clear to know is right now there is no reason to be involved in a trade at this stage, right? Basically, it does everything that we don't want to see. The zigzags in a very tiny range with two possible developing scenarios. One of them is 3 higher highs, 3 higher lows with 2 waves retraced to the upside, and one of them is a potential 3 lower highs, 3 lower lows, and then sell the rallies. So completely open for any direction, and the market is simply waiting to see who is going to take the control, the buyers or the sellers. For us, right now, the right thing to do is go neutral. It does not develop, it does not develop the momentum we expected to see. That's what we were looking to trade. Just a reminder, triple double. We got the trend line, we got the breakout, and it looks like the spike ruins the trade. The answer is the spike happened before the breakout, and then we got the breakout, price move inside, back and forth, doing nothing. And if it does nothing, we step back and go neutral. The idea is to stay in trades that basically develop, gaining momentum. If they do not get momentum, it's a very simple say by the market. And what does the market say in that case? That it's not, that there are no buyers or sellers in the game. In this situation, there are no sellers yet. So that's for the Euro Aussie. Very important thing to do, because as traders, we always find a way to surround ourselves or fill ourselves with belief. But it has to go down, or it looks too good, or the 4-hour chart is a head and shoulders, so it must break to the downside. There is no such thing called must in trading. And the market does not really care about these beautiful lines we draw. Whatever we draw falls in the category of expectation, right? We have to trade the facts if they fit inside the expectation. It's important to remember that, because there is always a reason to be involved in a trade, and I want you to remember that, right? It takes much more courage to find a reason why not to be in a trade. And when you find one, like for example 2 time frames divergence against, okay, that's a good sign to step back and wait for clearer things. So what could be clearer things if, for example, it does turn to be the lower highs, lower lows trending pattern? Then we can discuss about sell rallies. Okay, but we need the market to clean this movement for us. Next one on the list, guys, by the way, if you have any question, so please ask. Would be much easier to explain. The next one for us is buy dips in the euro versus the Canadian. As we got the 3 higher highs, 3 higher low structures on the daily time frame. Euro Canadian. Here we go. So 3 higher highs, higher lows in play. This is a channel. Our idea is this, and that means the 4-hour chart to provide us the buys. And here we are, 2 waves in play, bullish divergence coming in a play right now. These 2 waves also supported by the 1-hour chart. Now we do not have any clear false breakout here in play. That's not a false breakout. No 2 candles rule in play here, right? This correction did not cross the 2 candle rule, so it cannot be counted as higher highs. So the best thing to do is, of course, first of all, get the trend on breakout. Okay? The more conservative thing to do would be to get the bullish trend. 3 higher highs, 3 higher lows, and then look for the pullbacks and buys. Okay, so this is pretty much what's happening right now with the Euro CAD. Starts to form a good divergence, pretty strong supportive area around. Also, if we take a look on the, that's actually much lower. No, ignore. I thought it's close for us. No, it's not. So that's for the Euro CAD. Now, as the correction happened, we want to start looking for the bullish signs against, creating the higher highs and the higher lows. This is the definition of the bullish trend. Now, one thing I want to explain here. On Monday, I explained why I believe we are going to see one more low created, or basically second leg from the 4-hour chart, because at that stage 4-hour chart was one leg here, one straight leg, right? And it already had a bullish hidden divergence. So theoretically, that looks like a fantastic buy opportunity. But as explained on Monday, because the way that this one leg was developing on the 1 hour chart, one leg on the 4 hour is a cycle by itself on the 1 hour, right? That's the rules. And the way it was developing here, it's 3 lower highs, 3 lower lows with 2 waves retrace. That by itself is, as we know, bearish pattern. And because of that, the chances that the 4 hour chart would deliver the second leg to the downside were much higher, right? And that's pretty much what happened. Now, as it happens, we are in a great position to start looking for the buys. It could be with false breakout and higher highs, or it could be by gaining the higher highs, higher lows, and then buy retraces. Is that okay so far, right? I'm very happy to hear, Tibor. Thank you very much. That's why, on Monday session, the main thing is the coverage, right? We need to cover everything, for the entire trading week to discuss and put all the setups and the directions. And now, especially when the market doesn't move too much, right? There are no real new opportunities of new instruments. So it's a very good time to go and discuss about these things as they develop, right? As they become setups. So to see this development, how we expect, how the market really builds, and to see that happen, and that's how it become a trade, right? From expectations into a trade and a setup. So that's why it's very important such days to explain that step by step, and you will see it's getting clearer. Good, thank you for the feedback. All right, so that's for the EuroCAD. Guys, if you have any questions, please let me know. I'll try to explain as slow as I can, as detailed as I can, but if anything is still not clear, let me know. The next one on our list is the euro versus the pound, and after the break of the trend line, our view is bearish. We expect it to reach this magnet zone of the triple cycle, also clearance from the weekly, right? So we wanted to sell the rallies on the 4 hour chart. Let's take a look. Where do we stand? That's our 2 waves, trend line broken, retested, and continues. Those who missed the original breakout got a fantastic 1 hour chart, false breakout, even though it's missing the classical 2 candles rule here, but it has the alternative of the inner 2 waves, and the continuation. Also, by the way, it's beautiful to pay attention here how it gets the structure of the lower highs, lower lows with the retrace and the bearish hidden divergence for trend continuation. So basically the expectations of our remains the same. We want to see the pair getting into this zone. I'm not going to draw it once again. It appears for you in the report. Complete the divergence inside, and after that, very likely, because right now it's a plan, right? We will be cashing out the sales fully and look for the turnaround for the buys. The way I see the moves of this pair for the longer run is the following. First, correction, second. And if you take a look here, it will remind you one of the pairs we already discussed about, band to band with 50% deviation, like the Aussie Kiwi, right? The Bollingers, you can find a webinar about it inside the members area, of course. All right, so let's move on then. That's from the euros. Now, pound versus the Canadian. We are for sells as long as we are inside the magnet zone, and we were looking for clear setups. Of course, it could be done just a swing trade, right? Sell and hold for a swing. But as per the setups, let's take a look. Where do we stand with this pair right now? We were required to see false breakouts and convergence, which did not happen. Here, it looks like a false breakout, but there is no divergence. The false breakout without divergence, it's not a complete false breakout. Or alternatively, we were looking to get 3 lower highs, 3 lower lows. As for now, we have only 2. And these 2 are with bullish divergence and trendline breakouts. So there is a good chance that stands for the ABCD. And from here, again, like with the Euro Aussie, both scenarios are possible. What are the both scenarios? First of all, to get the false breakouts, as it originally was expected. Second, it could simply turn around right now and still create 3 lower highs, lower lows. It also could do just one move, some sort of a range, breakout, right? Second move, and then third move, right? 3 lower highs, 3 lower lows in this kind of scale, like the gold did before, right? So there are too many possibilities right now, and yet not even one setup. Okay, so talking about setups, there is nothing yet to do, and this nothing is yet relevant on the 4-hour and on the 1-hour. There are no lower highs, lower lows in play, and there are no false breakouts with full convergence. That's why we're still in a waiting zone, and yet this is a massive area which we will be looking to trade, and we are looking to trade. And there are 2 ways to trade such things. One, simply be involved based on the levels, like swing trading, or wait for the setups. And for the setups, we're still missing it. There is a good chance we are going to hit a false breakout here, potentially create alternative trendline false breakout, still stay inside this critical zone, and just postpone the celebration of the bears. Okay, so as you can see, the zone is there, divergence is there, the levels are there, everything is there, just no setup. Okay, it's important to remember patience is a key when you are dealing with the bigger scale cycles like the weekly and the daily. So nothing really yet new for the pound cat. Pound yen turned to be a celebration for us. This trade delivers this and delivers greatly. So our plan was, as we got the 3 higher highs, 3 higher lows on the 1-hour chart, we wanted to see retraces and buys. Retraces could be 2 waves, range, or 1 leg with a bullish hidden divergence, as long as we hold the invalidation area, which for us is the 61.8 Fibonacci. As per the 4-hour chart, we were looking to see basically second leg, 1 shot, correction, and continuation. And the main cycle is deriving from the daily with the expectations upside. So where do we stand with this pair? Here we are. The higher highs, higher lows in play. 1 shot to the downside without a bullish hidden divergence, as you can see. Not too far, but fact is a fact. But yet, then it delivered the second leg with a blockage of the same level like a double bottom, a bullish divergence in play, and the break to the upside. So the triple double is in play, our buy is running, and right now unchanged. Of course, those who are involved, stop loss to break even, risk free. Why? Because we do not want to be exposed to whatever the surprise comes out of the pounds or out of the US markets and the dollar yen to follow. So risk-free is very smart. Right now, no signs against. And as long as it is the case, the run continues. So pound yen turns to be very nice for us. Pound Canadian buy retraces is our plan. Let's take a look. What did we have with this pair? Nothing really. Since, right? We are stuck. So the retraces currently happen in a potential ranging structure. Of course, it could develop into deeper two waves. We don't have enough evidences at that stage to know more information, because we don't have 5 spots inside the triangle and we do not have yet completed 2 waves. So the plan remains the same, just missing setup. Now, one note that I was asked about today about this divergence in the Telegram group. Now, it looks fantastic, definitely, and of course could create some bounces. In that case, it did a little bounce, but it's very, very risky to trade. The first low, it's a 1 candle low, as you can see. Divergence should come at the end of a trend. And first of all, this is not a trend, it's 1 candle low. It's not a real move, not a completed cycle, right? Not a trend definition. So it's not reliable to use such things, especially when we are stuck in the inner moves, right? So no, that cannot be treated as the divergence on the 1 hour chart. That's all. It could be traded on the like intraday, trading this pattern, for example. Where is that here? But again, you know, intraday comes with excitement, but with its own risks. So don't confuse here. So what's up with this pair then? We don't have anything new. We do not have any new evidences in play as well. So the idea is the same. We or maintain the range and then make the breakout for continuation, or develop the 2 deeper waves back to one of the trend lines, main trend lines. So here or here, and then looking for the bullish evidences, bullish divergences, trendline breakout, or on the lower time frame, higher highs, higher lows. New Zealand dollar is our next one. Buy retraces here as well. Nothing happened with this pair as well. We're still stuck in the same zone. So same story. We either go for breakout and continuation or deeper correction and then the buys. The plan stays the same exactly. Basically, quick reminder, what do we trade right now? This was the first leg, and now we expect the second one go and develop in play. So that's the New Zealand dollar, unchanged, no new setups involved. For us, for all those who run the buys from the previous week, there is no change. That's pretty much it. And the dollar franc, we expected the retraces and continuation until this would become a divergence. Basically, let's see, where do we stand with the dollar franc. So here we are, little pullback, continuation, and this now develops a divergence. So look where we stand with that right now. Top of the rising channel, bearish divergence in play inside a triple cycle. Is that a good place to cash out partial? The answer is of course yes. As per the higher time frame, no signs against, so holding the other part. And if you are not yet involved, then corrections with bullish evidences and expected continuation. So that's for the dollar franc. So far so good. Gold and silver, we were riding ourselves. Now there are two things to pay attention to on the gold. First of all, the daily divergence. Second, it's not only daily because the 4-hour now develops a divergence. This is a great place for partials. Reminder, we are involved with this trendline breakout, and after some annoying moves the previous week, the expected move happened, and right now two time frames start to develop signs against. Two time frames develop signs against. As always, it's a place to listen to the market. Why it's partial and not full? Because according to the cycle, there is still room to go. Okay, and divergence is only the first sign. We yet not created higher highs, higher lows, nowhere. Not 4-hour, not daily, not even 1 hour. So the bottom line is the cycle did not change. Divergences are a warning sign, cycles still bearish, and this is why it's only in play as a partial. Natural gas, we are looking for buys as long as the daily trend line holds, and we wanted to go with buys when the 4-hour chart trend line will be broken to the upside. So the 4-hour chart trend line to the upside not yet broken, so no buys yet. And as you can see, the daily chart, let's zoom in so you can see a bit clearer. And the daily chart is currently invalidating the bullish view. Therefore, natural gas becomes currently not interesting and is moved to neutral. Stocks are unchanged basically. The main two ones in play currently, that's the BMW that does nothing since we have it on the list, and also the SOC General as well, pretty much stuck inside. Nothing new happened or developed, so real no updates. Ethereum versus the Bitcoin as well, no updates, the price not changed there. And let me see that I didn't miss anything. Yes, I did. We have our sugar also not much changed because we did our partial cash out, then we give the rest to run. That's not a run, that's a breakout yet. A break, sorry, not a breakout, a break. So this is pretty much what the market managed to deliver to us from the follow-up list. The pound yen is the main rock star, the euro pound does well, the euro Aussie stuck, we are stepping back. Gold delivers, we have our dollar franc, and and of course the Aussie Kiwi. And now on the follow-up is the main things to pay attention for a possible trade to develop. It's the same Aussie Kiwi as explained, the Euro CAD, which looks fantastic, and the New Zealand pairs, which also are currently stuck in ranges, and could be the next rock stars. Questions, guys. If you have any question, please ask now. That's the time. And once again, I would like meanwhile to remind you, tomorrow Thanksgiving, then Black Friday, Cyber Monday. So the volumes are expected to be down. And the volatility, unless there will be some surprise from the market, also should be accordingly. So I see no questions. So thank you very much for being here. Happy Thanksgiving to all those of you who celebrate. In Canada, we celebrated it already several weeks ago. And I'll see you, as always, in a Telegram, guys. Enjoy your evening and your relaxed day tomorrow and a nice weekend. Thanks for being here. Bye for now.